Hey everyone, and welcome on this holiday shortened week. We've got our FogCutter Live coming at you. I'm Mike Curtis here with Preston James, founder of Traders Edge Network. We've been teaching and helping investors just like you trade in the stock market since 2003. Preston, say hello. We got a lot to cover in this last FogCutter of the year.
Yeah, good morning to you, Mike. This is crazy. Lots to talk about actually in this shortened week. One being no earnings announcement, zero, nada.
Yeah, I
It's
mean, and really light on the economic front. I mean, we've got a GDP. This was delayed because of the government shutdown. So that's that Q3 GDP is coming out. We want to talk about the holiday schedule this week. Gold and silver just rip roaring. Preston, I know you got your eye on a few stocks that you want to share with the folks at home. So
yeah, the Christmas season. I want to give some maybe early Christmas presents,
there
but
you
we'll
go.
do it later on. Hopefully, that's the little hook, the little
Mm-hmm.
candy cane hook to keep them tuned in for a minute.
There you go. And maybe we start with the Santa Claus rally. People hear it. It's in headlines this time of year all over the place. And I think sometimes people they don't fully understand how that's counted. So the Stock Traders Almanac, they count this is the final 5 days in December. All right. So for this year, that'll be Christmas Eve and then the 26th of December, right? So the market closes early on Christmas Eve, on December 24th. Of course, it's closed on the 25th. So the 24th, the 26th, and then we got 3 days next week, the 29th, the 30th, the 31st. So those are the final 5 days of December. Then the first 2 days of January. All right, the first 2 days of January. So, of course, the market's closed on New Year's Day, but January 2nd and then January 5th are the first 2 days of January. Okay, so it kind of it spreads out really over these 3 weeks here, but we've got those 5 days in December, the first 2 trading days in January, and that's what makes up our Santa Claus rally. And if the market performs over that stretch of time, if we're up over that period of time, even a little bit, that's kind of our Santa Claus rally indicator that most of the time leads to a positive year that for 2026. So in that gain, it averages 1.3% going back to 1969. So we kind of get this. And Preston, you could talk maybe a little bit about the volume this last trading week of the year, but we just kind of get a slow, steady uptick if that Santa Claus rally is in play.
Yeah, I'm also reminded of a Mark Twain quote. He said, "History never repeats itself, but it often rhymes." That's what he said. So I mean, it's not going to be perfect. It doesn't mean every day going up. You're just saying the balance.
Yep.
Basically, we're saying if the year ends off, with buying, and the first couple days starts in buying it since 1969. Now, I don't know if that's every time, but the majority of the time, we end up going into a real decent next year.
Mm-hmm.
And I was just reading too, Mike, how more rate cuts are forecast into 2026. Right. We've got the current idea whose time has come, which is as obvious to anybody as the AI trade.
Yep.
That's in play. And I just to add to this, Mike, the top 10 stocks are 40% now of, I think that's in the S&P 500. So 40% of the S&P is in the top 10. And a lot of that has been fueled by this idea whose time has come.
Yeah, definitely. Yeah, the big have gotten bigger. You've talked about that. I think it was Google's last quarterly report where they hit that 100 billion in revenue for the quarter, right? A quarter being 90 days, right? So they're clearing over $1 billion a day in revenue. So I mean, the big have just gotten bigger. So yeah, that's led to a little top heavy S&P 500, but as their producing, they're seeing revenue, they're seeing profits, they're seeing growth.
True.
It's hard to ignore that. So
Yeah, you could ask, what do we do with that? I'd say nothing. It's just how it is. That's
yeah. So looking out at this week, like we said, no real earnings. So tomorrow, before the market open, we do have that delayed GDP, the Q3 GDP, gross domestic product, which is kind of is that broad gauge, the underlying economic momentum, which can lead to how the Fed is interpreting the economy, future rate cuts. So really, it's pretty light. I'm seeing Wednesday morning some initial jobless claims, and then that's really it as far as the. There's nothing today, so pretty light on the economic front. And of course, when the market's closed, like it will be on Thursday, just really no economic reports that we really have to worry about. So maybe a little bit of some pre-market activity from that GDP. But Preston, what do you usually see on the volume front, volatility front? Of course, it's not ever guaranteed, set in stone like anything in the financial markets. But over this next, week and a half or so, as we finish up the year, how do you usually see the price action and the volume playing out?
Yeah, it's like I say, we want to see that. We want to see a Santa Claus rally. That always adds some confidence for now and into the next year. But normally volumes are lower than normal, and people start to check out on this week, a week like this, starting today. I
Mm-hmm.
mean, they're busy traveling. They're leaving the city. This is all traders, institutional, everything. It's just not the normal hustle and vibe and in action, and
Yeah.
that's understandable.
Yeah, little different change of pace, and I somehow I missed this, but consumer confidence is also tomorrow. So a couple little ones on that front, but yeah, Preston, let's talk real quick. I know people are probably really wanting to hear your Christmas present list of some stocks you're watching, but I think we have to talk about gold. Silver has just been on a run, and one of your money presses this year has been on that silver ETF SLV.
Mm-hmm.
But when I was checking the tape, I think silver was right up at 70 an ounce. Uh,
Silver's traveled 125% in value in 2025,
that's
and
wild.
it had been very like we're seeing right here, going back. If we go back 5 years, there was just look at all those years, Mike, where it was just kind of back and forth, nothing to see
Mm-hmm.
here. That really shows it off how it just took up and off, and a lot of the things that I read about silver and gold was that silver historically has lagged gold a little bit, but that it, gold was moving and silver was not catching up. And so there, it just, we can see it right here on the screen. It did a
Mm-hmm.
lot of catching up after not doing so for multiple years there.
Yeah, and even gold, a new all-time high, I believe today, um, hitting 44.70 an ounce,
Wow.
so closing in on that 4,500 level. And a lot of people that I've seen headlines and your analysts predicting, these investment banks predicting into next year, saying this thing could continue its climb and hit that 5,000 an ounce number in 2026. So I know, Preston, you're always, especially when gold about a year and a half, 2 years ago, was dipping down into that 1900 an ounce. I know it grabbed your eye, and you've been scooping up quite a bit ever since.
Why
Just as
not?
more of a buy and hold investment, right? That's not something that you're looking to jump in and jump out. Just kind of sitting back and watching that appreciate.
Yeah, for me, it's just, the pie chart of how you've got stuff divvied up.
Right.
Don't you have to have some of it in gold and silver just to say that that's your chunk of the pie? Anyway, yeah, nothing more than that. I know people can get really, conspiracy theories, and they not everyone, but people can get this dive really in deep, and the money supply is this, and I'm very political or whatever.
Right.
It's just fun to hold it in your hand, for crying out loud.
Yeah. And I guess to throw the tough question at you, I mean, do you think as we've had this run, do you wait a little bit for it to cool off, to consolidate, to pull back, or are you just all systems go?
Well, that's a toughie, Mike. And how we were trading silver was with the money press, and
Mm-hmm.
of course, when we showed silver for those 4 years before it went ramp, I mean, that's actually a great money press time because we make money if it goes neutral to higher,
Right.
even down some. But when it goes parabolic, I mean, that's why I've been in SLV, and then we had to get out because it busted up and out.
Going
And
too
then we
high too
got back
fast.
in it again, it busted up and out. And we're like, hey, but directionally, to ask where does that go next, or has it been too much too fast? I don't know. It looks kind of extended here, but what do I know?
Yeah, and I'll give a little shout out to our mentor Lee. So he comes into our Mike's Mastermind Project webinars, and he's taken our traditional money press, and then he adds just a little directional call to the mix, which just makes it a little more bullish, right? The money press by itself, a little more bullish to neutral, slightly bullish to neutral is kind of the sweet spot,
Hmm.
where stocks hang out the majority of the time. But you start getting some of these that are supercharged and you add that call option into the mix. And now, if it does see more of that parabolic type of move, you can really cash in. You know, your money press might just be spinning its wheels, but then a week where it consolidates or goes sideways or takes a breather, the money press can now kick in. But if it's having a week where it's just, kind of doing the bottle rocket thing, that long call is now cashing in. So a lot of our Mike's Mastermind Project members have thrown that kicker on with SLV, and they're doing like the touchdown celebration dance, just catching some of that really fun move there.
You know what you could do as well is with the profit that the money press cranks out, you know, I get it. People like to spend it. People like to just have it in their account and see their account grow. But Mike, maybe what he does this, but you could peel off, you could just take some of that money press profit and buy calls with it.
Right.
So the calls in essence don't cost anything. They're
Right.
free. So
Yeah, the
that's an
market's
extra
paying
kicker.
for market's paying for your position.
Yeah.
No, I love it. No, that's great. I mean, really, P, I think we hit on some of your early Christmas present stocks that you're watching, keeping an eye on. Because outside of that, I mean, I know some bank stocks, the financial sector, they've kind of been in focus coming in.
Mhm.
Um, with just some of these interest rate cuts. There's I think some earnings coming up on tap, but again, nothing this week. So
And really,
Preston,
two companies I really haven't heard of announcing next week. So for this week
yeah,
and the next, Mike, right now into 2026, it's just, yeah, really no earnings announcements, which is kind of a nice break. We all need a break.
definitely,
Uh,
yeah, it's just a nice little change of pace. The market, typically, I mean, yes, there can be some volatility. Yes, it's going to be moving. Yes, it's open and trading, but historically, it's kind of the lightest volume week of the year in between Christmas and the New Year's
and,
holiday.
and and to layer over on that, I fail to mention this, but and I think this is obvious to most people tuning in, but when we enter a week like this and have one whole trading day not happening, Christmas, and
Mm-hmm.
then half a trading day happening on Wednesday, the day before Christmas. This is very similar to the Thanksgiving week, where the market's only open 3.5 days out of the normal 5. Well,
Right.
when there's that much less trading going on, a lot of our strategies focus on the weekly options, collecting that premium. So those are just lower this week.
Totally.
There's no conspiracy or anything. It's just like there's 3.5 days of trading versus 5.
Mm-hmm.
That's 1.5 whole days of less squiggly lines happening. So
Yeah, it's like 30%, right? It's a
yeah,
30% shortened week. So it's pretty significant when you look at it. Almost a third of the trading week is, we're missing out on. So yeah, pretty
yeah.
significant. Definitely will impact those premiums. So all right, Preston, we've kept them waiting long enough. I know you got your eyes on a few that you just want to highlight and share. So why don't you dive into that?
Well, thank you. And I was going to say, if we are sharing a beer, but I'm thinking of this time of the year being festive. There was once I was in the Adolphus Hotel in Dallas. I'm talking to the bartender, and come to find out that Jerry Jones, the owner of the Cowboys, likes to frequent that establishment, especially their cocktail bar. And they told me that his favorite drink was Maker's Mark and eggnog. Now, I don't know why this just lodges into my memory bank, but if I was sitting down with our viewers, enjoying an eggnog and Maker's Mark, and I would maybe share the following and these are all positions that I'm in, but I just want to preface this, Mike, by saying AI trade is in the beginnings. Yes, the top 10 stocks, and you were talking about NVIDIA, Meta, Microsoft, Apple, Amazon, they all have their fingers in this AI rollout, but they're established, and yes, the big get bigger. So could you make money buying NVIDIA on a dip? Absolutely. Amazon in a dip, all the overtime. Okay, that's solid. But the three I've got are younger, aggressive, growing names that they're kind of in their toddler phase of being publicly traded. And there's nothing wrong with being a toddler. There's a lot of growth in front of you. My 3-year-old little grandbaby likes to say right now she's in a phase where she tells us this is the way, and we have to tell her no, that's not the way. And then if we say this is the way, she'll go, no, that's not the way. But I mean, it's okay. They stumble around, they fall over, they donk their head. And that's what it seems like. Some of these charts on some of these toddler phase names are, anyway, they're a lot more pronounced. They're a lot more volatile, if you will. So the following that I'm saying here, I am in LEAP positions. LEAP stands for long-term equity anticipation security. Basically, it's a fancy way of saying a long-term option. And I'm on the call side of these. So these are long-term call options. Well, what's strike price? What's strike price? Well, if you get really big moves in the underlying name, that's the big thing of why a certain stock rather than the little nuances. But I like to buy them slightly in the money, if you will. Mm-hmm. So anyway, that said, if we're having our makers and nog in our eggnog with a little nutmeg on it, I would say that of my long-term leaps, given recent action and all the forces that are happening with the AI trade, blah 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 blah, I extra love me some Nebius, NBIS. Take a sip of eggnog and makers. Freaking, there it is. There it is. How'd this one do during our SAMs last year, Mike?
Really well. It's been a fun one to trade. Lots of premiums. Yeah. Obviously in that AI world has that explosive upside. Settled back down through all of that AI valuation reshuffling.
Being a toddler, this is exactly what I like. Yeah. And so this isn't, what's it doing next week? No. Hey, what's it doing? What do you think of what's in the month? What's the PE ratio? No, none of that. This is long-term leap. And when I say long-term, the longest you can go out in expiration right now is January 2028. Wow. January of 2028. That's plenty of time. So anyway, a leap on Nebius. And again, January 2028, CoreWeave, CRWV. This company is way newer, toddler phase, and is all in the data center and cloud and all kinds of relation to the just the connectivity and the cloud part and data center part that needs to be in place for all this. Again, this is not a 40-year-old energy utility that's having a little AI to it. It might move the stock 42 to 44.
Yeah, it only went public end of March. So yeah, really new publicly traded company.
Exactly. And we're not predicting what it does. I'm just saying getting a leap instead of the actual shares, you get leverage, you have time. And the biggest challenge ever, we go over these in our live events, Mike, we talk to people, is patience.
Right.
I see way too many people getting out of some of life-changing trades. And the number one reason, Mike, is because they get bored. Anyway, that's two. And number three that I like right now for a leap is Hood, as in Robin Hood, HOOD. And they're just consolidating here as well. I just think they're in a real sweet spot. They're a little more mature, not as young as some of these other ones, but they're obviously more in the trading area and just growing like mad.
Right.
I like to try to catch these companies on pullbacks like this. So,
yeah. And what would you guess, Preston, just throwing out a number? If there's a 20-year-old opening a brokerage account in their 20s, right? 20 to 29, 30, what percentage do you think are going to Robinhood in that demographic?
Oh, compared to like a JP
Fidelity, Schwab, exactly, yeah.
Account, I'd say 100%.
It's probably up there. Yeah, it's probably up there. And 5-10 years down the road, is that 28-year-old is deeper into their career. I don't know the numbers on it, but I'm guessing most people that set up and establish a brokerage account are pretty unlikely to just change and flip-flop once in a while, of course, but people just transferring money, closing positions, opening up the new account, moving the funds or the positions over to the new account. It's enough of a hassle. Just like, when you open a bank account, most people stay there for a while. I think that there's definitely some staying power on a lot of that.
No, it's a good point.
So
that's what I got, Mike. That's my makers and eggnog speech.
No, I love it. And it, also on Robinhood, they were added to the S&P 500, I think about 6 months ago. Was it only 3 months ago? Maybe it was only 3 months ago. And that, of course, just long-term can give them a nice, I think we looked it up, Preston, at the time, but almost always a year later, when that stock's been added to the S&P 500, they're almost always performing higher. So I believe it was in September. So I think it was only 3 months ago without looking that up, but just going off of memory. So fresh to the S&P 500, another great one to keep your eye on. Great premiums if you're looking for a money press opportunity as well. Technically, it looks like we're putting a little higher low in here. See if we can go.
I think it's a solid money press too. Good point.
Yeah. So awesome. Well, to wrap this one up, we got a fun story. Randy L sent in a nice note. We'll share this as we wrap this one up. What Randy had mentioned, he said, I've been learning and trading the money press with Preston and the crew since early last year on a part-time basis. But Randy retired in April of 2025. He said, I'm now fully committed to WOW. He joined us with our SAMs, our small account mastery series that we usually do in May or so of each year. And he said, my trades since entering have largely worked out over the long run. He's traded NVIDIA, SMCI, VRT, Delta, Datadog, lists a few others in there. He said APO was working well until this past week of profit taking. He said my SMCI money press is up $9,800. Said with all the busyness of life, I completely forgot to celebrate the wins, taking my wife out this weekend for a getaway. And that's something we try to push for our WOW insiders, because you see the number changing on the screen, you see your brokerage account fluctuating. Sometimes it's easy to let it get lost. And I know for me, Preston, we've talked about this. My account will grow and hit a milestone, and I barely even stop and celebrate it. I'm just thinking about the next goal. I'm thinking about the next milestone. You don't even stop to enjoy it or celebrate it. So I love that, Randy, that you're going out and making it real, making it tangible, going and celebrate that. But he finishes the note. Thank you all for teaching for the teaching moments every week. It makes a big difference navigating through the fog of the markets. And that's what we love to do here at Trader's Edge, whether it's this fog cutter, hence the name, help you cut through the fog and the noise out there, the financial markets, all the chaos, all the jargon, all the things that I think can make it feel a little intimidating. We try to keep it simple, help you navigate the financial markets and learn a life-changing skill. So thanks, Randy, for sending that in. We appreciate it. And shout out to you for sticking with it, putting in the work.
Hell yeah. Here on this shortened week, Mike, I thought we'd just be on here a short time too, but this is one of our longest ones. This is always a blast.
Yeah, we love it. So we'll be off next week enjoying the holiday again. Pretty low key trading week. So we'll be back hitting the new year fresh. So Preston, thanks as always. I know people love your insights, your all those decades of trading experience and knowledge really shines through. So appreciate you. Happy holidays, Merry Christmas, Happy New Year to everyone, and we'll catch everyone in the new year.
Catch you guys. See you next year. But to our audience and to you, Mike.
Yeah, sounds good. Thanks, everyone.